So hopefully we make profit.
Yeah.
How do you know what to do with the profit?
All right. So for me, and I first of all, I recommend the book Profit First. If you haven't read that, I highly recommend that. I didn't write that book, obviously.
By whom?
Michael Makowski, Mike, yeah, great book. Highly recommend. Um, there's basically four buckets that people should consider when they're deciding what to do with profits. So I'm not going to say here's how much should go in each of these four buckets, but these are things that you should go through these four categories and have a plan for how you're going to address these things. So the first one is your personal income tax liability. One of the biggest misconceptions when people start a business is the company has an income tax debt. That's not how it works. Until you become a massive company, you as the business owner have the sole income tax debt. Now, you may take distributions out of the company in profits to write a check to the IRS. That's perfectly fine. And that's what most of us do. But the company does not have the debt. I, as the individual, have the debt. So the first thing I got to consider with profits is I got to pull enough out of the company to pay my debt, my IRS liability. So that's the first thing. The second thing is a rainy day fund. How much do I need to have in a rainy day fund if something goes wrong? Do I want 3 months of revenue? Do I want 5 months of expenses? Whatever you and your CPA come up with is fine. Again, I'm not going to say out what the number should be because it's different for everybody. People have different risk tolerances and all kinds of things. But this is one of those categories that we should at least, we decide for the year or our overarching plan in general, we should consider how much should go to the rainy day fund. And if you say zero, that's fine. It may be for you. The next thing is growth. Okay, so if we need to buy equipment, we need to buy vehicles, we need to buy whatever because we're a 16 person company, we want to be a 63 person company. It's going to take some money to buy things along the way. So distributions we should be maybe putting the money aside for that growth. So if we're gonna, if it's gonna cost us $120,000 a year to buy things to get to the level we want, how much that should come from the profits of the company. The fourth and maybe most important one to all of us is how much do I get to keep for being the business owner? How much do I get compensated for all the stressful nights and the sleepless nights and the hassle with customer complaints and employees and all, like uh, I need to be compensated also. So those are the four buckets: my compensation, my tax liability, the rainy day fund, and growth. So again, how we decide to allocate, we could say 25% is going to go to each. Okay, if that's enough to pay your tax liability, then fine. In most cases, that's probably not going to be enough. You're probably closer to 50% to pay your tax liability, or 75% to pay your tax liability. And you might only have a little bit left for the other ones, and that's fine if that's where you're at. But those are the four categories I'd recommend we at least consider before we decide we're going to take this money out and it's going to go X. Because if we don't consider those things, it'll all go to tax liability and my compensation.